Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. In this week's screen, the master screener himself is asking you to pay attention. So let's, without any further stalling, find out what that means. Kevin Matras is here, our top stock screener and head of our Research Wizard division. So whenever I don't understand what he writes, I just go right to him right away and get a clarification.
Pay attention, Terry.
It's an interesting title. What the heck does it mean?
You know, nobody is in trouble, of course, but after a fantastic July, I just figured now would be a good time for people to kind of take stock of their portfolio.
Okay.
Take a look at the holdings they have, continue to monitor your watch lists, think about pulling profits on a lot of your spectacular stocks, and also think about getting rid of some of your losers or your underperformers. Mm-hmm. The reason why I think this is an appropriate topic right now is because what's so ironic is that when the market is going up like this, right, when you're in a bull market, all of your stocks, you know, seem to be moving up in tandem with one another.
Oh, we're not in a bull market yet.
Well, we are in a bull market.
Maybe a bull rally.
A definition of a bull market is when the market is up 20% or more. So whether we want to call it a bull market or a bull rally, it is definitely bullish because we have seen some spectacular movements in the market. But when people are seeing their stocks going up like this, I think people have a tendency of getting lazy, or people just kind of get a bit complacent, and even bad decisions can be rewarded in a bullish market like we have. Mm-hmm. And the problem is that when the market stops going straight up, that's when people can get into real trouble. And that's why I think today, it's appropriate to just talk about what you have to do to pay attention to the stocks that you have, or at least to the stocks that you're considering.
Okay, got it. Don't get complacent. I'll just sit back here and let you do the rest of the talk.
Well, I mean, think about it. You know, getting into or deciding what stocks to get into is very, very important, but your work is not done once you've actually purchased a stock. Mm-hmm. You have to continue to monitor it. Right. So, for example, let's say you ran a screen. Let's say one of the main things that you decided to look at before you bought a stock was you wanted to look at debt to equity ratios, right? So that's your big thing. If, in fact, that debt to equity ratio has changed to an unacceptable level, a level that never would have put that stock on your radar screen in the first place, you should consider getting out of that stock and replacing that stock with a new stock that does meet the criteria that would have gotten you into something in the first place. Same thing with let's say, the Zacks rank, for example. If, let's say, you're looking at a stock that has a Zacks rank of a number 1, right? Mm-hmm. A lot of people use the Zacks rank as a timing indicator, trying to find stocks that are going to be moving right away. But let's just say after you get in, now they have some earnings estimate revisions that are being lowered. Now you see the Zacks rank has gone from a 1 to a 4. You should get out of that stock. Sure, it was a 1 before, but it's no longer a 1 right now. And if you never would have purchased a Zacks rank of a 4 in the first place, why would you want to hang on to a Zacks rank of a 4 in your portfolio? So you have to make changes, and that's what I mean by using your common sense and paying attention. Pay attention to what's happening in those stocks once you have actually made a decision to get into them.
That's really good advice for just about any time you're investing, but especially when things seem to be going well, people can get too attached to a stock, become too complacent, and then hang on to something too long, even though the dynamics have changed.
Right. You know, I think a lot of people will kind of get complacent, as you said, and, you know, it's one thing, you know, seeing stocks go up and not paying attention to it, but I think it can also happen on the downside. Sometimes you'll fall in love with a stock, right? And all of a sudden, maybe there is a bad earnings report and the stock is down 10% or more. If you see your stock down like that, it's now 10% or more against you, get out of that stock. Mm-hmm. Because if you were to take a look at almost every big loser you ever had in your portfolio, down 30%, 40%, 80%, you probably would have had the opportunity of getting out of that thing a lot earlier, at the very beginning of when it was starting to crumble.
Right.
So if you don't want to get out of a stock because you're thinking to yourself, well, I don't want to take a 10% loss or a 15% loss, then it continues to go lower. Now that price that you could have gotten out of before that you didn't want to is now a price you only wish you could get out of today. So it's very important to continue to pay attention. And I also know that a lot of people don't like getting out of a stock because they're afraid if it goes up, they're going to miss out. Look, if you get out of a stock and it starts to snap back and there is a legitimate reason to get back in, give yourself permission to get back in.
Always get back
Just
in.
pay attention.
Yeah.
That's it.
Now, some of the stocks that you're going to run down in list form this week are stocks that have come through some of your favorite screens, right? In the Research Wizard.
Right. Not the
This is not a
ones, the
screen
favorite
that we're
ones.
talking about
Right.
today. So, all right, some of your favorite screens have produced what stocks?
Yeah, the Research Wizard, that's a program I use, and again, there's a lot of predefined screens that come with it, and again, that's key, try to find something that works. So here's 5 stocks from some of the screens that come loaded with the program, and here we go. We've got Airgas, CPFL Energia, SNX, STO, and then Toro Company. Fact of the matter is, all of these companies are coming through some very profitable screens, but again, all of them have very good fundamentals, but if you decide to get into these companies, continue to pay attention to the fundamentals. Don't let these stocks get away from you. Just continue to pay attention.
Do you own any of these?
No.
You've got more listed in the printed version of this week's
No,
Screen of the
just
Week.
5, but if you want to
just
see all
5?
of the stocks, just open up the Research Wizard.
Okay, and so for a text version of this week's Screen of the Week commentary, all you need to do is go to Zacks.com's homepage and scroll down till you see Kevin's picture. Click on the headline right next to it. If you want to know more about the Research Wizard, of course, go to Zacks.com/Research Wizard with Kevin Matras. I'm Terry Ruffalo.